studio with me now is Dobek Pater. He's in studio to unpack Vodacom's numbers, which were published today, and also compared to the telecoms operators' peers in the industry. Always a pleasure to have you with us, Dobek. Maybe if we get your first up analysis of it. For me, all I see is data, data, data. It's been highlighted as the future, and it's proven now in Vodacom's numbers.
Yes, it is, yeah. And especially if we look on the consumer side, data will dominate. And going forward, as you rightly said, we're moving into the so-called fourth generation network environment, known as LTE also. And that is effectively, it means faster data connectivity on average to customers, and it is expanding. Vodacom's been putting quite a bit of money into investing into expansion of the 4G network, continuing to invest the 3G network. So I think that's the main story on the consumer side. Certainly, as far as a group of services is concerned, that's driving revenue. But if we look at the fixed line environment that Vodacom is increasingly participating in, that's another area to look at. Still small, but we're looking at the fiber optic story there, for instance, and increasingly rendering fiber-based services to the SME market segment and to the enterprise sector as a whole.
Tell us about that, because so often everyone talks about using technology to enhance businesses and increase and improve economic production and contribution and economic growth in South Africa. And they did touch on the Neotel acquisition, that they're looking to add at least 1 million fiber connections to homes and businesses, which you've highlighted. Maybe if you can explain the potential there, because this is Greek at the moment. Yes. Can you break it down into simple English?
It's 1 million over the next few years, I think 3 years or so. But effectively what it means, we are increasingly more, or using increasingly more as humans, as users, consumers and businesses, technology to drive our lives and to conduct our lives, and also to drive businesses, to conduct business on a daily basis. And in order to do that, we increasingly need to have better connectivity, and fiber provides that connectivity as a best suited medium to large capacity throughputs, quality, stability of a network, quality of the signal. And what is also driving it in parallel is the fact that a lot of services are becoming commoditized. Even your Windows suite, your Office suite with Office 365 from Microsoft, for instance, is based in what's called the cloud. It's out there on a server somewhere in Ireland or in the US. And in order to access it and be able to access it on an ongoing basis efficiently, without hiccups, you need a good, stable connection to the internet, because you're accessing over the internet. Increasingly, a lot of products are becoming commoditized, especially when we look at the SME market segment, small to medium-sized businesses, and they're based in the cloud, because that model is less expensive for service providers to provide those services, and therefore less expensive for people who use it to consume those services. If we look at the consumer environment, increasingly we are starting to live in an expanding multimedia world, and that's being consumed to a large extent going forward over the internet. So not necessarily over the satellite dish, although that will still stay with us, DSTV, but they're also moving towards a fiber-based supply of their services. But a lot of consumption takes place straight from the internet. It will be entertainment, education, all sorts of things. And for that, you need better and better network infrastructure and connectivity to stay globally competitive.
That's true, and it makes sense. Vodacom has been known to be quite a good dividend payer, but this increased capex expenditure, it almost seems as though every year they need to roll out on capital expenditure in order to remain ahead of the curve. Is this an area of concern for you? Do they have the capital necessary to deploy this, or might they need to raise money?
Well, they may need to raise money, but I think they're quite capable of doing that and handling that, and I think investors would be probably quite willing to lend that money. But it is unfortunately a bit of a catch-22, especially with not only mobile operators, but in particular mobile operators, because technology changes quite quickly. Well, it's relatively quickly, but if we look at the period that it took on average between the initial GSM networks, the second generation, and the third generation, and then the period between the third and the fourth, it's almost shortened by half the number of years, which means that technologies, every few years there's a new technology standardized globally that's coming to the fore that provides better, faster connectivity and quality of service, or allows that to happen. And operators, in order to stay competitive, especially the larger operators, need to keep investing in new technologies in order to deliver better and new services to the customer base. And unfortunately that costs a lot of money. So They are obviously looking at ways of sharing that infrastructure as one of the means of reducing costs, but it still takes a lot of money to deploy the initial infrastructure. And it just so happens that in South Africa, we're also in an environment where a lot of that pressure from the mobile wireless environment in terms of the fourth generation networks is also has come at almost at the same time as pressure in the fixed line environment because of the fiber rollout. So you need to keep rolling out new fiber infrastructure to the home, to the business, to the mobile sites in order to provide better what's called backhaul capacity. So you can that new fourth generation mobile site actually does provide the speed, the throughput that it's intended to.
Exactly.
And that investment needs to be done in conjunction with wireless mobile infrastructure investment. So there's unfortunately that sort of compounds the fact that you find yourself in a situation where every year it's another few $100 million.
Lots of money that's needed. But let's get into that money question, especially for investors, ones who are interested in putting Vodacom against its peer MTN. Vodacom is sitting at a share price of around 131, PE of 15. MTN, on the other hand, 212, PE of around 14. So your thoughts on which one is more competitive here as an investment?
Vodacom's been performing better. It depends to a large extent what do you think the respective operators will do going forward in the local market, but also outside of the local market. So Vodacom continues to be largely dependent on the South African market and has to make sure that it remains strong in the local market and generates the revenues, because it still accounts for almost 80% of revenue approximately for the group. It has far fewer operations in Africa than MTN does, and MTN also has operations in the Middle East. Some of those markets are fairly good markets, like Iran, in terms of performance and revenue generation. So MTN is a lot more diversified. However, I think it's also because it's in so many markets, its opportunities for greenfields expansion may be limited in terms of acquiring new operations. So it has to try and expand within the markets where it's present. Vodacom is, they've indicated they will be on a more aggressive drive to try and acquire additional operations, possibly through M&A activity in Africa, and they may try and go into some of the markets where MTN is present and target some of the players there. So whilst both operators need to grow organically, I think from a greenfields perspective, Vodacom may have a better opportunity because it's in fewer markets and trying to expand its operations. MTN has historically had a lot more, I think was a lot less risk averse and willing to take on maybe second best positions and turn them into first best positions in the market. So they've been able to do it historically. Again, it's
tricky one, hey?
Going forward depends how the two different operators will actually, how aggressive they will be in expanding into new market segments. And I
was trying to determine if you're red or if you're yellow, but clearly it seems as though you like a bit of both.
Another thing is to look at Vodacom has been, I think, to date more successful at its fixed line operations, yes. The Vodacom business, compared to MTN has had a bit of a slower start, sort of stopped and started for a while and started again. And from that perspective, not only in South Africa, but also outside of South Africa and other country operations around Africa, Vodacom is probably in a better position to try and take advantage of it, to grow that line of business. And it also has the, maybe not quite the advantage, but it has a partnership with Vodafone, which is present in other African markets that provide almost a platform for Vodacom business to start, like Ghana, for instance. So there it's one step ahead of MTN, and it has a good, I think, footing to grow from in comparison.
Dobek, just one more competitor that we don't often refer to when we're speaking about mobile players, but it's Telkom, another telecommunications firm, which its share price has had a fantastic run in the last year, up by more than 100%. Also sitting at 73 rand. Some say now this is where Sipho Maseko and his team really need to roll up their sleeves and prove that the proof is in the pudding, and this is where the hard work begins now. Your thoughts on this particular share, or are you want to take your losses now, cut your losses on Telkom?
I would think that that particular share is probably driven to a large extent by the fixed line operations and possibly future expansion into IT services operations. Depends whether the Telkom BCX merger will be approved, which in all likelihood it will be by the Competition Commission, the tribunal. and that will be a big positive for Telkom going forward. So it would expand its capability. On the mobile side, I think Telkom Mobile is at a turning point or a cusp. It's a small operator. It either needs to expand its operations, which is very difficult in a market like South Africa, where it's saturated and we've got two very strong players, Vodacom and MTN, plus a third runner-up competing player, not to denigrate Cell C, but it's still there and it also is competing for market share aggressively. And on the other hand, how much, you need to take into consideration how much more money does Telkom really want to plow into Telkom Mobile before calling it quits, and a large determining factor in this will be the cooperation with MTN, maybe something evolving further out of that in terms of network sharing.
Dobek, we'll have to leave it at that point for today, but I'll tell you what, we'll get you in next time to expand further on the other players in the telecom sector. Thank you so much for your time today. Thanks to Dobek Pater, who is the MD at Africa Analysis.